Hey traders, TG Watkins here. It is May 25th. I hope everybody's having a good week. And we're starting to see some traction in the market, namely in the S&P is where I'm going to be talking about today. We did have the FOMC minutes. Pretty much no new news there because, yes, they said they're going to be raising a few more 50 basis points. And they're trying to get up to, I think it was 2.25 or 2.5 total interest as far as the federal funds rate. So we know that they're going to be raising pretty much every meeting coming up. And so, it's just baked into the cake. We already know that. So it doesn't seem like there's too much action here, but a lot of times it's the next day that kind of matters. So we'll have to see where that goes. But a couple things I wanted to point out was that we did have an undercut right here. So I wanted to show you that. I know I talk about double bottoms a lot of times, or at least I talk about elf shoes, but a lot of people talk about double bottoms. That can be a little bit misleading if you're not experienced enough to understand what the idea of a double bottom, because it's not just a double bottom. Sometimes it's shallow and sometimes it's an undercut. And in this case, we got an undercut, and that's it's basically like a bear trap. It goes lower, makes people think that it's going to break lower. They go short, and then it reverses on them pretty handily. So we're pretty much at a 20% market pullback, which is another reason that we're kind of coming up on that area where we should see a little bit of reprieve. We should see the market just generally start to trend upward. The question is it going to be a very exciting short rally, or is this going to just be mush, or is this just going to kind of trend and float up, or is it going to be sideways? That's what we really don't know at this point. But I would imagine that the low is pretty much in from this point, and we should start drifting higher. So we've seen this thing running along the third ATR. The stochastics are down. Sam's oscillator, high-low oscillator is all the way at the bottom. Same here with the hourly. And then we came off the low there. And then with my Moxie indicator, we've seen price down. We've seen a higher low with the Moxie indicator. And then we saw a lower low with price, but a higher low with the Moxie indicator. And then as of Tuesday, we got the Moxie indicator to fire long, which means momentum and energy on that time frame is now positive. So that's a thing. And then down on the 15-minute time frame, we've gotten some good things, and this is what I was posting to the subscribers. We got some divergence, but really the biggest thing I want to show you is this. We had a trampoline move on the 15-minute time frame. So this is something that's really important with the Moxie indicator and helps keep you on the right side because, maybe that day the internals were very negative and all that, but that day we saw a price really get pushed down. But what I was watching is that 15-minute Moxie indicator, noticing that despite price really going down, that the Moxie indicator was actually staying over zero and doing it quite nicely and fairly easily. And that actually, by the end of the day, the Moxie indicator on the hourly chart had fired long. So that was the stuff that was kind of leading me into a bullish sentiment over the last 2 days. And then we can actually see here where yesterday into today, so Tuesday into Wednesday, we did get price back over the 15-minute 50. And then middle of the day, we came in and we tested the 15-minute 50. And then you can see we got some noise right here with the FOMC minutes, and then we started to move higher. So that was the process, and this is exactly how I teach and what I go through and looking for support and confirmation. And now we're trying to get past the hourly 50. This one seems a little bit more robust and appropriate compared to this one. So second time's a charm in this case, and let's see where that goes. All right, everyone, thanks again, and I'll talk to you soon.